Hello and welcome to AEF TV in association with Engerati. I'm joined now by Theans from Barclays. First of all, welcome. Thank you for making the time to be with us today.
Thanks.
And one of the, and you were just in a panel session, so we're creating a link to some of the dialogue that was happening in there. One of the things that I'd like to explore is, there are a lot of people saying, look, money is there, equity is there, whatever words you want to use, it's all there. But why are these projects not getting over the hurdle?
Yeah, we had an interesting chat now. Basically, there's lots of DFIs looking to set up funds and looking to set up development financing, project preparation money. So, one of the discussions was, is there really a shortage of developers out there? Is there really a shortage of people willing to take those risks? And my own view on that is that I don't think there's a shortage of project developers in Africa. Over the last few days, just at this conference, I've met so many of them. The challenge for them is not having the money to develop the deals, it's actually getting these deals to close. From an equity perspective and from a debt perspective, from our bank perspective, I can tell you the money is definitely there. For a good bankable deal, good sponsor, good EPC contractor, the bank will definitely make the money available. The challenge for us is actually taking that well-developed project and getting it to close. Now, it sounds simple.
Yeah.
We're working on 2 projects at the moment. One in Zambia, one in Mozambique. It's taken us longer than 3 years to get these deals over the line. And
why has it taken that long?
Well,
I mean, if I can just ask where my question comes in, you say, you use the words well-developed projects, well put together. So if they're that well developed and that well put together, why does it take 3 years to get it to close?
No, the single biggest issue that we've got is, and please, I don't want to go and bash any governments, but the single biggest issue is getting that regulatory side signed off. It's getting the final power purchase agreement negotiated and getting the government support structure around the deal finalized. And it's critical because it's not only, there's a few issues. Firstly, the utility typically will buy the power. It's not always the best credit quality, which is why you need the government to step in and
So there's this creditworthiness of the off-taker, effectively.
Yeah.
And again, so that I can drill into this so we can get to the heart of the problem. So there's the creditworthiness of the off-taker, and also then that is where you, as the backer of the project, or the project itself in fact, needs to make sure that they get paid for this power that gets generated, right?
Yeah. It's like if you have a customer, the customer needs to be able to buy your product. In this case, the utility needs to be able, over a long period, to continue to buy power.
So in some ways, it needs some sort of guarantee, a bit like we have in the UK, a guarantee of what's the new nuclear power plant. We're going to guarantee that we're going to buy the electricity for 15 years at this rate.
You need a government basically to say they will support this deal. And it's not only because of credit quality, also politically. You don't want the next government to come and say, well, we'll take away your project and we will nationalize it or do anything with it. You actually want government at the highest level committed to this deal.
So it almost, we know what governments are like, politicians change all the time, so in their short-termist thinking is in their DNA, I think, and these are my words, not yours, But so do these things then need to be enshrined in law, or how concrete do these guarantees need to be in order to, for a company like yours be happy with the risk?
You get various types of guarantees, and working for a bank, I can go through a full list. But ultimately, you want materially sufficiently captured the guys. When there's a problem, they will step in and make it right. However you word that legally, It could be a letter of support, or it could be an undertaking to step in, or it could be a full-blown unconditional guarantee. And we will look at all the options, and softer options also. But the bottom line is, commercially, you want them to come out strongly and say, I will stick by this project.
So some of this is kind of, the equation doesn't square off, and I'm going to be very simplistic to try and get to the root of the problem. So everybody is sitting here going, there's a power supply shortage in Africa. There's a power supply shortage in Africa. It's like a stuck record. Okay.
Yeah.
Right. And politicians are saying that, oh, well, we need to deliver power to our community. Probably part of manifesto pledges and all that sort of stuff. So why does it then take 3 years to commit? It's like a commitment issue.
In a way, maybe it is.
Yeah.
Look, I mean, a lot of these countries, you've also got to appreciate it's the first time many of them are doing IPPs. If you take, like, even South Africa, all the power that's on the grid has been basically put there by Eskom directly on balance sheet. And we can talk about the South African example, which is an absolute great one, because they've gone about it in absolutely the right way. But the first IPP deal you do in any country is always going to take a bit longer to get done, because it's a bit of a it's an exercise to get everyone comfortable with the risks, comfortable with just how it works.
Are you saying it then gets easier and easier and easier?
It gets easier as you do the second and the third and the fourth deal, because there's precedent.
And you've got the blueprint, I suppose.
You've got the blueprint.
So,
but it would be helpful if there was a proper framework, and this is going back to the framework where we actually, there's pre-agreement on some of the key issues, so you don't have to go and renegotiate it for every single deal.
So isn't then all of this driving what some people have observed who've been sat in your chair, this notion of distributed energy? We were talking off air a bit, like, heavy power users like mines and things like that. They got two issues. One, they're in a rural location, so getting transmission lines there is probably cost prohibitive. So that's one example. But isn't this sort of slowness of delivering power driving people to self-generate and create these micro projects? And then how do you finance micro projects? So that's two questions, but let's stick with the first part of it.
It is interesting. The reality is, if the grid is far away and it's going to be very expensive to connect, and for many very rural, remote areas, it's the only option they've got. Put some PV plants up with a little bit of storage to supply the very basic need. The financing for those things probably a bit more complicated, because you can't do a ring-fence project finance for a 2 megawatt little PV plant. But maybe the trick is to, if this is rolled out on a more broader scale, is to maybe use a different type of instrument. Maybe this is where the DFIs come in. Once there's sort of sufficient, critical mass where they could go and refinance this somewhere else. But in terms of technology and in terms of, in a way, this is competing with the massive transmission structures that's being built to connect the big plants. But in many cases you can't wait.
Yes.
But it is going to be tricky. But if you look at technology, this is maybe where technology comes in. Technology is now so advanced that and it's all about storage. So if you can store electricity for longer, you can put PV panels up, and in some cases, communities could have close to 24-hour electricity. And
this is the microgrid concept.
Exactly.
Basically.
Yeah. And even on a household basis, everyone's seen what Mr. Elon Musk is doing in the States. If those technology gets cheaper, potentially every household could be generating its own electricity.
So, what role do you see, your community, the banking community, playing in those, and how do we create a framework for releasing funds to those type of projects, which are going to accelerate power to rural communities where,
I mean, what we do look at as a bank, for some of our clients which are located in these remote areas, is to provide facilities to them to put their own generating capacity on site. So it's a captive plant arrangements. And there's various ways to structure this as a lease or as like a mini IPP with power purchase agreements on the back. So we're quite willing, if it's a good credit quality client and there's a need for power and you can actually, through whatever solution, deliver it in a competitive way, that it's not totally out of line with what they would pay the utility to buy the power. A lot of our clients are now seriously looking at that. And it's not only about the price of power, it's actually about the security of supply.
Right.
Because a lot of their businesses, if you look at a mine or a smelter or the risk of and the cost of not having power or it's switched off for a few hours, it's much bigger than maybe paying a small premium to have certainty.
Isn't that kind of a little bit bad for the utility business model, though, isn't it? If everybody starts going off grid and saying, look, forget a country's energy security, I want my own energy security, I'm making cement here or smelting or whatever.
Look, I think long term these solutions will never be able to compete from a competitive perspective with the big plants. So in many cases I think this is a short-term, medium-term solution until the whole Africa is properly electrified. So it's not so short-term, yes, but long-term I cannot see this impacting them in a big way.
And as we're getting to the end of our time here, let's give a nod to the fact that we're here at this conference at AEF and so on. If we can ask you the question, what are some of the conversations that kind of give you hope of encouragement that you aren't going to have to work for 3 years on the next getting the next deal over the ground to get electricity out there?
Look, I think what is good, we've seen quite a few power companies, developers, EPC contractors, and there's a real excitement around these guys. And I think if you speak to the guys who do the initial groundwork, the guys actually developing the deals, doing the feasibility studies, they seem quite optimistic, and it does give us hope as well. I think the other side of it is there's actually now been evidence of a lot of deals being closed for the first time in many countries, Nigeria, Ghana, Kenya, Uganda.
So they're over the line now.
So they've done their first deals. So the second, the third deals will definitely go a lot easier.
So are you then predicting with those countries, if you and I talk again next year, we're going to see the deals multiply?
I do think so. I think because you need, in a way, you need the experience to be sort of conveyed to the guys in governments also, sitting on the other side negotiating. And once they realize and they understand, it's not the private sector trying to rip them off, it's actually, this is the way it's done.
Yeah.
And getting up the learning curve to so that you don't have to start from scratch negotiating for the next deal. I think it will make a big difference, and so I'm quite positive that over next year, hopefully we'll have an exponential increase in the deals closed.
Well, I tell you what, let's have this conversation next year. Thank you very much for joining me today, and thank you as well for watching. And this has been another interview from AEF Dubai 2015.